talking about this market, and again, we just had the announcement, not too long ago that hey, the bull market is back. We're more than 20% off of our lows, and for a lot of people, that might have kind of struck them as odd. For some people, you've been like participating, and you're like, hey, I've been doing pretty good for a while here in stocks like Meta platforms and Nvidia and Apple, which those are all at highs. And then there's others that are kind of looking at the attractiveness of yields going up, and they're just like, well, why don't I park my money in treasuries? Because getting 5% sounds pretty good, and not something I have to worry about, especially after a 2022 where things were down so much. So again, there is kind of, depending on what you had in your portfolio, you might be viewing this market very differently. But for those that are like looking at it and are kind of like stunned at how strong it's been, I think there is that, I guess, desire, the fear of missing out, the strong urge to be doing something, be buying, because you're just seeing all of these stocks pass you by. So, what do you do to fight that?
You really have to have a plan, right? I think that's the biggest thing. You have to come up with some kind of plan. And you mentioned a number of different strategies there, and they're all fine. I mean, the first thing is figuring out a strategy that works for you, and it doesn't necessarily have to be the strategy we talk about here a lot. But you have there has to be some kind of plan with some guidelines to help you manage yourself. Because if you let yourself get out of hand and you let your emotions dictate your decisions, you are going to do the wrong thing. Now, as we saw in 2020, sometimes you get away with it,
Yeah.
and you can make a lot of money in those times. But I guarantee you that a lot of those people who were going off emotions in 2020, if they didn't have a plan for in 2021 and 2022, they probably gave a bunch of that back, right? They
Right.
probably didn't hang on because that's just human nature. That's what everyone's going to do if you don't have a plan, if you don't have a reference. And that's really why we use charts, right? It gives us an idea of where the market is. And then, of course, that's why we have all these rules to help us manage ourselves.
Mhm. Well, and I would argue that the other side of that was true too, because on an emotional level, when the market did have its fall through day in April, that was a hard one to stomach. That was a hard one to believe would turn into something like that. And, yes, in hindsight, it's easy because you're like looking at all of the stimulus that came in and all of the money that was being pumped in and everything like that. And it's like, oh, of course that's what was going to happen. But at the time, we were dealing with this huge uncertainty of the pandemic. And then we get a follow through day, and you want me to invest in like this most uncertain times? I mean, in April, we didn't have a test, we didn't have a vaccine, we didn't have knowledge of how bad this was, we didn't have numbers, so I think there was certainly a lot of uncertainty there. But as you said, Arusha, the chart was showing you something very different than what your emotions might have been telling you.
Well, I think this is why this is the beauty of the fall through day, because the fall through day, it's a simple rule, and now it's if you try to learn how to interpret it those first few times, it's very confusing, right? It's
Mm.
but once you get it down, or just read IBD, uh, and they'll tell you when you get a fall through day or not, and when the market's shifted back in an uptrend. Um, it's going to get you in at a time where there's a chance the market goes up. It's not guaranteed. As we saw in 2022, there can be a lot of false fall through days. But
Right.
what I like about it is it's going to tell you, okay, the odds are a little bit higher now that the market could start to rally here. And it's simple enough now where you must look for something to buy. And if you start seeing a stock breaking out that has the characteristics that we look for, you take a shot and see what happens. And you buy a small position, something to actually put money to work, because once you put money on the line, that's where the emotions come out. That's where you get the feedback. And that's why you have all these rules to kind of manage yourself, because everyone gets very emotional once you put money on the line in the markets.
Hmm.
So what I now, if you're just a chart reader, if you're a technician, uh, it was very natural back in April of 2020 to expect that, look, this is a V-shaped recovery. It's going to run up to the 200-day moving average and probably come back down and come pretty close to those lows, right? Or just come back in a little bit, test the bottom, and then maybe go sideways for a while and then take off. But the markets don't care what should happen, right? The market's just
Right.
going to do what it does, right? So that's why I love the falter days, because they're simple enough that it are going to trigger at some time, and so then you just kind of slowly get pulled in, just like in 2020. Same thing has kind of happened this time around, and it's been, I think, a little harder, Justin, this time, because we had so many failed follow through days,
Yeah.
right? Which are, so I want to say maybe 6 or 7 over the last 18
Hmm.
months or so. Um, but
Which is not unusual for a bear market.
that's completely average, right? But after you get worn down by
Yeah.
these follow through days, you start losing faith in them, right?
Hmm.
And you start out, it's going to be another failed follow through day and all this stuff. And that's completely human nature too, to do that. But you have to try to shift that mindset and get some money to work to slowly snap you out of it. Maybe for some, they'll snap out quicker than others. But uh, really, this market has kind of dramatically turned, I think, in the kind of behavior over the last month or so,
Hmm.
where now it kind of looks obvious in hindsight. I have it right here, the Nasdaq on a weekly chart, and really, when you look back a couple of months ago, it looks pretty obvious that, wow, yeah, the character of the market really kind of changed. The Nasdaq put in essentially a cup with handle here, and it got really tight. Yeah, it's completely normal for it to go up. But the problem is that after you go through 18 months of getting whipped around and having a number of failed follow days, it's much more natural to think that it's probably going to fail and come back in, right?
Hmm.
But the reality is if you had some money at work, and you didn't have to have a lot, but you had some money at work, you would have started to see that, hey, you know what? Some of the stocks I bought are actually making progress, which was a different type of behavior than what we've been seeing for the last couple of years.
Hmm. Well, and I think it's important here that what you did was you looked at a weekly chart. It is a very different perspective sometimes when you look at that weekly chart. And again, that tight action that you just pointed out becomes a little bit more obvious. But when you were actually going through it in April, keep in mind we still had the noise, as you said, the bank failures. Are there going
Yeah.
to be more? What happens as you turn over more rocks? Are there going to be more, more ugly creatures coming out from under these rocks? Um, that was going on. And certainly I think one of the things that was interesting about this follow through day, we had the follow through day. March 29th was our most recent one. That's the rally that we're going off of. We didn't go up immediately. April, a lot of tight action first. And it was also, it seemed like for a while there you had this follow through day in the Nasdaq that was working, but it wasn't the same for everything else. Let's go back to January 6th follow through day.
Yeah.
That seemed like everything was participating, right? It was a very strong rally, seemed like this is the start of something big. And then 1 month later, February 2nd, everything's kind of topping and at the same time. So markets were a little bit in sync. So I guess that out of sync, the divergence, um, you know, does that ever change how you handle a follow through day when you've got something where the follow through day is here, but gosh, it's not over here? I mean, heck, we still have the Russell 2000 below the 200 day.
To a point, it does. I mean, it might make me a little bit more cautious. And I remember even this time around, like thinking that, I mean, really for a bunch of this year, thinking like, oh, you know what? It's only the large cap tech stocks are participating. And I remember just telling others that, oh, well, then just buy the large cap tech
Right.
stock.
If
But,
that's
but
what's working.
yeah, but I didn't. It's not. I only bought some of them, but now I wish I told myself to be a little bit more aggressive at that time. Like, just buy all of the large cap tech stocks, right? Because those, you mentioned it, like Meta and Netflix and all these stocks, they're working really well right now. I was still kind of spreading around, looking for some of the newer ideas and all this kind of stuff. But uh, so you have to kind of play the market you're dealt and given, right? Versus the market that's kind of the ideal one. And so if you and it goes back to, look, if you have a follow through day, you start seeing stocks that are breaking out, try those stocks, right?
Hmm.
Don't worry about all this other stuff. And if you're a little bit concerned that it's not a lot of broad participation, fine. Just going smaller. Maybe instead of playing 100% of your money, play with 20% of your money, but have something
Hmm.
in the markets, because it's always what I've found over the years. It's always that money that I've had, the small amount of money that I've had in the markets, that's shifted my mindset,
Hmm.
where I've been completely bearish and thinking things are never going to go up to, and it can happen in a couple of days, where all of a sudden you see some of those stocks that you've bought, and it might not even be a big position, but all of a sudden you're like, wow, I'm up 10% on this in a short amount of time. And it's like, and then you start seeing another stock breakout and another one and another one. And that's might be over a couple of weeks, and you've tried those and those all start working. It's weird, but all of a sudden your mind shifts starts to change, and you get a lot more confidence. And
Hmm.
this is all, yeah, the rules are there, and that's all simple. And that's like 10% of the game. 90% is psychology, right? It's getting yourself to
Following
follow
those
those
rules.
rules, right? So that's, it's that shift where all of a
Mhm.
sudden it's like, wow, things start to feel better right now. Now I've had that kind of feeling. Now it's, this one has lasted a little bit better, and I have a lot more, I have more confidence this time around. But there were a couple other times over the last couple of years I had that. The first was right at in March of 2022, right at the top there. I was starting to feel like, wow, this is starting to feel pretty good, and
Right.
then all of a sudden the markets collapsed, and then really around that August time where things were starting to work, and then even the February time that you mentioned, Justin, where
Mhm.
things restarted getting, and then it kind of collapsed. So this could still come in pretty hard. It still could collapse. Anything's possible. And if that happens, then you back away, right? You cut your losses or you take your profits, and you might not have as much profits as you might have now, right? And you back away and let the market set up again. But
Mhm.
this is kind of the process. It's tricky, but in many ways I feel like this is our type of market right now. The markets are starting to broaden, and I feel like for the first time in a couple of years, maybe the markets are acting better than they have during that time period.
Right. And a lot of that has to do with the feedback, right? You're,
Correct.
as you said, you start having things kind of work for you, and that allows you to put more money to work. So again, it really does kind of come down to starting right. So I guess if we're going to talk about your rules for fighting FOMO, the first thing you need to do is start right, and that starts with the follow through day. Now, once you've gotten a little bit of time under your belt and you can see what the market is telling you about the follow through day, and granted this one took a while, right? You had March 29th, and then you had a pretty decent kind of pullback in April, at the end of April, and then in the beginning of May. And so you had these kind of pullbacks that were enough to maybe shake your faith a little bit, but they also gave opportunities, some of these pullbacks, to buy a little bit more if you so chose. So I guess there's that component is the kind of proper way to do it, and you slowly build your portfolio size and exposure up. But and look, I'm guilty of this myself. There's a lot of stocks that I started with these small positions, these probe positions,
Hmm.
and then when they really started ramping up, I'm like, oh, I don't have enough of it.
Yeah.
Nvidia, for instance, and so then I'm constantly fighting this urge to not chase it, not get my average cost up too much, but at the same time, put more money into what is obviously one of the big winners of this market.
Yeah, it's funny. Like, I have, I've been able to get in some of these stocks that have done pretty well, and like you, Justin, like you never have enough. And while I remember, just like even a couple of weeks ago when these things were working, it's like things are working finally, and you're starting to see some progress. And it's like I was miserable. Yeah, I was just like, everything is like I'm making money and I'm miserable. and
That's
that's
not
the
enough.
because and that's the one thing that I've learned over the years. You're going to be miserable. You're never going to be happy in this. So follow the rules, yeah, and you try to be as disciplined as possible and try to make money, right? And the next time around, you'll get better at it, or maybe you'll stumble, but you're never going to be happy in this. The moment you are happy in this, you probably should sell everything because
Right.
things are working way too well,
Yeah.
right? And it's the kind of the yacht test, right? If you start thinking, hey, you know what, maybe one day I'll be able to afford a yacht, just sell everything because things are working way too well at that point.
Mhm. Well, let's before we kind of top off this topic, let's talk about one other thing. Is if you are still on the sidelines, and as you said, look, you've got time. These do play out over years, not days. So if this is a market where we're at the beginning stages, what's kind of the way to increase exposure by following the rules, by being disciplined, and not succumbing to FOMO? What's the proper way to get more of that exposure in if this market truly does work?
Look for some stocks that are forming bases right now, right? There's always kind of a set of stocks. The best ones have taken off. They took off months ago. They're off and running. Then the next set took off maybe a couple of weeks ago, and then third set's probably setting up right now. So you can look for some of those stocks, try a couple of those, and see how well those work. You don't necessarily have to be super aggressive, but start to try to get traction. Just getting that traction can help build your
Yeah.
confidence. The other thing I would say is, and these markets are going to pull back, right? And they'll probably pull back tomorrow, right before you listen to this podcast, and you're going to be wondering what we're talking about. We're recording this on Wednesday after the close, but these markets are going to pull back. They're always going to give you opportunities, right? But you have to have that right mindset, because
Mhm.
every time I've been waiting and begging for the market to pull back or the best stocks to pull back, when they do pull back, I don't want to buy them anymore, right?
Yeah.
Because you're like, forget it, I don't want to buy them anymore. So you have to be just
Especially if
kind of
there's a news event that is like kind of, coming out that makes it, oh, well, now things are bad, kind of thing.
right, exactly. And we could have that. We're just we're in the middle of June right now. Yeah, and from mine, this is anecdotal, but from my kind of experience, July's generally been a pretty tough month for
Yeah.
me,
Hmm.
where a lot of our kind of stocks do come in pretty hard and shake you out, and it looks terrible. And then August they kind of build bases, and then mid September they complete them or something, and then finally you end the year strong. Maybe we're in that kind of phase, but we're going to have a really it's going to come in hard again, right? The markets are never easy. They're going to come in hard. You have to prepare for that. If you caught a bunch of if you played this really well over the last couple months, first, well done, but don't assume that it's going to keep acting like this too. Look at some of those stocks and say, what are my leading stocks? What are the leaders that I really want to do everything I can to hold on to them?
Right.
And then for the other stocks, maybe cut some of those, right? Or maybe take some profits, partial profits at least, right?
Hmm.
So that's kind of the thing you don't want to just go, I'm making money now, I'm 200% in, I'm all margin, and this thing is never going to keep stop going up, right? You even if you had like the very best stocks in the market, you want to be careful of getting too top heavy, as Justin was talking about, and going on margin and getting yourself in trouble, because you could lose that very, very quickly in just a couple of days. You could
Yeah.
lose all your gains in a couple of days very fast. There could be
Hmm.
another crisis. There could be something which could really, in many ways, be a normal pullback in the market, but
Yep.
it could be a very severe pullback. So in the end, it's being disciplined. Try to get some of those tier two, tier three stocks that are merging out of bases, and then I think the other thing, Justin, is look, maybe just buy a couple of ETFs
Yeah.
in
Hmm.
some stocks. I mean, in some, like maybe the IWM that you mentioned,
Hmm.
or some other one that's near a support area or emerging past a pivot or some resistance area, that you can first manage that, get some exposure, And then once some of the better stocks move back, or one of the stocks that you've identified that you really want to get into, once that gives you an opportunity, you can move out of that the ETF money and put it into one of those leading stocks.
Yeah, use the ETFs as a source of cash. And one other thing, because you keep on talking about these, tier one, tier two, tier three stocks. Mike Webster used to talk about grading his stocks, and
Yeah.
and you could do that for really kind of all the stocks on the market. There are certainly right now a whole host of stocks that I think a lot of us are looking at as, hey, these are the leaders. Maybe you caught some of them, maybe you saw some of them go by, you didn't believe it, and now you're just waiting for the opportunity to get into them because they're so strong. And in hindsight, it was easy, right? And now you're at a point where don't let these fall off your radar. You should be watching these, waiting for those opportunities to get into them. And yes, maybe you're getting a tier two or a tier three stock in the meantime, taking some, smaller gains from those, and using those as your source of cash when maybe that tier one stock gives you another chance at getting into it, because they they always they always give you a chance. A lot of these greatest stock market winners do have their pullbacks, and again, it's scary when it happens, especially if you're in it at the time. It's a lot easier watching from the sidelines
Yeah.
than when you're in it, right?
Yep.
A tight action, you know, when you're in it, feels like, oh, my stock isn't going anywhere, I chose poorly. When you're not in it, it's like, oh, look at this tight action, this is perfect. It's giving me a chance to buy it. So yeah, the
Yeah,
perspective
And
changes different.
Justin, well, and you mentioned, yeah, like AI and stuff like that, and I do, and I've seen plenty of people talk about like, oh, AI is a bubble and all this, and it
Mhm.
might be. It very well could be. I mean, it really kind of seems like there is a kind of big catalyst out there with Chat GPT
Yeah,
that really is going to change. So that part makes sense to me, but it could be a
and
bubble.
it seems early too.
It seems early, but it could
Yeah,
be a bubble. Maybe this is, well, a quick run up. Like, to just keep an open mind, it could be a quick run up like the cannabis stocks
right.
from like 5 years ago, and then everything comes in really hard.
Mhm.
That is definitely within the cards. But that being said, even if it's a bubble, if you have rules, you can do really well in bubbles.
Yeah.
I think that's the one thing that, yeah, just because the bubble doesn't necessarily mean that you have to avoid it. If you're buying properly, if you're disciplined, if you're following rules, you can do really well in bubbles. 2020 was a total bubble, right?
Mhm.
But you can do very well in those type of bubbles. But when the party's over, you have to be willing to get out and get out fast.
Yeah.
I think that's the real key here. So just because you're hearing everything's a bubble, yeah, I feel like almost the whole system has been really does well when you have these kind of quote unquote bubbles, because that's where everyone starts to have that FOMO. They really pile in, and that's what makes some of these stocks that are really game changing type of stocks start to go vertical into the moon.
Yeah. And it's worth noting that you know I can't think of a better example than the irrational exuberance speech,
Yeah,
that Alan Greenspan gave, that really kind of summed up what was going on in the 90s. And what a lot of people have to remember is that speech was given at the end of 1996.
right, right
So
around here. Yep.
it got so much crazier. So a lot of times when people say bubble, that it's not necessarily, it was all can always get bubblier. So just keep that in mind. And as you said, Arusha, that's where having rules to get you out properly, where charts can help you manage your emotions, because you're looking at facts of what's actually happening, the supply and demand that's going on in the market every day, as opposed to what people are saying. And that's when people are putting their money where their mouths are. So it doesn't mean it's not a bubble, it just means that there are ways to handle it. So very good points, Arusha.